Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and we have ourselves an XRP that is trying to creep back up over $1. We've had ourselves a little pullback over the last few days, but we have, it looks like the market overall is trying to work its way back on up to 2 trillion. So sit back and watch. Now, every once in a while, somebody sends me one of these videos, and I forgot who sent this to me, but every once in a while, somebody will send me a video from someone who's a pretty big, has a pretty big presence in the trading realm, and is not necessarily in the XRP, into XRP, but just has some interesting things to say. Wanted to briefly let you hear what this guy has to say about what he thinks could happen with XRP.
Mistaken, people in America can only continue to hold whatever positions of XRP they previously had before it was delisted. But if things reopen up, especially now that things are starting to move again, there is going to be a lot of buying and demand on XRP, which is going to skyrocket this thing even more. And then if we win the SEC case, that is going to be even more fuel on the fire, which is going to put this in a point where this could easily 10x before the year's end.
I agree with what he just said. I also tend to agree with this. This is credible crypto. Imagine being bearish on this chart. XRP is going to double digits and there's nothing you can do about it. I agree with that. And then this guy comes in, and I'll show you this chart in a second. He says, do you agree with this chart? What's the time frame? Will you still be all out at $10 to $13, or is that exit plan changed with the increased market cap? I've always said I will be all out between $20 and $30, and not 10 and 13. We'll start taking profits at $10. Most likely won't be out until $20 to $30, ideally. That'd be a toughie if it was between $20 and $30. I'll admit it. But okay, Ian Northing sent me this. Janet Yellen says this week's IMF and World Bank meetings will be a Bretton Woods moment for the global economy. They keep talking about this. I think there are some huge things that are about to go down, folks. I really do. And I think this has to do with it too. U.S. blacklists 7 Chinese supercomputing entities citing national security concerns. I mean, you have to wonder what's going on in this whole thing between, with regard to Bitcoin, China, proof of work, and the fact, and I do mean fact, that the mining is controlled in China. Okay, I went back because it's important that any old clips of Jay Clayton or William Hinman, who is the guy from the SEC that came out and declared Ethereum not to be a security, it's important that we get any of those clips we can. And the reason it's important is because those clips need to be out there just in case any of the lawyers for Ripple, or maybe John Deaton, who's doing the SEC lawsuit, or anybody else who has an interest in these videos, that they might be able to put in front of the judge or whatever. It could be helpful in the case. Well, I found several of them today. Watch this one.
We're generally going to see that as a securities offering. The chairman very famously said he hadn't seen an ICO that wasn't a securities offering.
Except for Ethereum.
People are sort of getting that. If you're raising money, people are giving you money and they're expecting some sort of return on it, not just the utility of the token, which is then usable and can be exchanged for its original purpose. If people are doing that, there's going to be a role generally for the securities laws, because that person raising the funds will know a lot more about the prospects of what they're doing, where they are in the stage of development, whether this is a highly risky idea, whether they have the right talent already assembled to make that idea work, where they are in that process. All these things that we refer to as information asymmetries. And if we see a high level of information asymmetry, and we see a central party raising the funds, there's generally a role there for the securities laws to protect the folks that are buying that instrument, who have some expectation of that third party. So it's very principle based. We do think we've cleared that up. I think most people generally understand when they're doing an ICO that they have to be worried about how the securities laws will operate.
It's principle based, except the principles don't apply to Ethereum, is what he's really saying. Okay, now this is from an oversight of the SEC's Division of Corporate Finance. I found this today. This is from Congress. This is Tom Emmer asking William Hinman some questions.
Offerings. Do you have any circumstances that come to mind that might render a token sale as something other than a securities offering?
The initial sale.
Now, while he's answering this question, you have to remember, Brad Garlinghouse and Chris Larson have been called into court. SEC has sued them, and the whole premise is that Brad Garlinghouse and Chris Larson should have known that it was a security. His answer to this question, is it possible that a utility token would not be a security because it's not done for capital formation? He's answering the question. He's basically saying, yeah, there's a possibility that a utility token could not be a security, and yet they were supposed to know for beyond a shadow of a doubt that this was a security back then.
It's quite hard to have an initial sale without having a securities offering, which is why the chairman has noted that the initial sale of these may require compliance or exemptions.
Let me ask you a question about that. Is it possible that a utility token would not be a security because it's not done for capital formation?
It is certainly possible that there are tokens that would not have the hallmarks of the security. And over time, many of these fundraisings are intended to develop networks where a token may be used to buy a good or service, and that's its only use. It doesn't have much utility.
No, I understand, but there's a difference.
In other senses.
If you can just, this is the difference. I mean, I get this all the time. People are suggesting that everything that is done in this area involves a currency or something like a currency or a security. But in fact, a security or a utility token is nothing more than a card, if you would, that will allow you access to a certain platform so that you can participate. Is it possible in your jurisdiction that may not qualify as something that's a security offering?
You certainly can imagine a token where the holder is buying it for its utility and not as an investment. And in those cases, especially if it's a decentralized network in which it's used.
I was buying XRP for utility, the potential of utility.
Not central actors. You would have this information asymmetries where they know more than the investors in those tokens.
Okay, and then there was this clip. This is the second part of that clip.
Time runs out. You've stated that, quote, sponsors of offerings conducted through the use of a distributed ledger or blockchain technology must comply with the securities law, close quote. You also stated, quote, investors need the essential facts behind any investment opportunity so they can make fully informed decisions. How can we improve the regulatory clarity for entrepreneurs here in the United States so that their contribution to something that may not be a security will not see enforcement actions by the SEC? I'll allow a quick reply.
Now listen to this answer. He's telling you how you can work with the SEC and there not be an enforcement action. Remember, nobody on the planet Earth has worked more hand in hand with regulators than Ripple over the last 8 years. Nobody.
One of the things we're doing is meeting with the participants who have these ideas that think that they may have a token that shouldn't be regulated as a security. We work through with them how that may be structured.
They work through with them, okay? And then they turn around and sue them after 8 years. That's the policy? Come on. All right, so then this was a tweet somebody did about a quote from Cryptopolis, who used to be Cryptopolis. He's now Macro Trader. One scenario: if the SEC determines XRP a security, it may no longer be traded on crypto exchanges. Once Ripple settles, pays the fine, and registers XRP as a security, it trades on the NASDAQ. Either way, a win. Just be aware, crypto exchanges may delist until that happens. This has always been a scenario. Who knows what kind of things are going on behind the scenes, folks. But, and then XRP Bart sent me this. Now, look at this. In the Ripple case, the SEC is now on trial and knows it. The SEC is now on trial and knows it. Look at this. Some agency chairs find an ambiguous statute hard to resist. They overinterpret their authority to regulate, and Congress too often goes along. The backstop of this excess is the courts, provided that the aggrieved have the wherewithal to defend themselves against the gargantuan administrative state. This familiar story is playing out in the U.S. in the SEC lawsuit against cryptocurrency innovator Ripple. But the buck stops with Magistrate Judge Sarah Netburn, whose discovery hearing in the U.S. District Court for the Southern District of New York on Tuesday exposed the SEC's unfounded and flawed arguments and some inconvenient truths for the former SEC Chair Jay Clayton and former SEC Corporate Finance Division head William Hinman. The hearing showed that the case, the San Francisco fintech, was based on an illogical premise. It alleged that XRP, the digital currency that Ripple uses for cross-border payments, has been an unregistered security since 2013, and that the SEC was just getting around to saying so on the last day of Clayton's tenure last December. With this late in the game regulatory determination, lost my place, the SEC now deems that every Ripple sale for 7 years was an illegal securities trade, and that Ripple, its two top executives named in the suit, along with millions of retail holders, should have known this all along, even though the agency never did. Due process and fair notice were thrown out the window to get the case across the transom on the day that Clayton walked out the door. The hearing detailed the many vague, contradictory statements regulators made on cryptocurrency over the years. In 2018, Clayton told CNBC that Bitcoin is not a security, and Hinman gave a widely covered speech which laid out how Ether was not a security despite debuting in an initial coin offering in 2014. With XRP, they said this status had not been determined. Trading platforms asked the SEC if XRP was a security before listing the token, and the agency refused to clarify. When asked whether XRP was a security, the then chairman of the Commodity Futures Trading Commission, Heath Tarbert, in 2020 interview declared, "It's unclear. Stay tuned. We're working closely with the SEC to figure out what falls into what box." This is all it looks very clearly like an intentional vague situation. It was intentionally made vague. And then look down here. This is the end of this. I didn't realize it went on. If these regulators were honest, they would admit that nothing in the 1933 Securities Act refers to cryptocurrencies, and then would request Congress to clarify the statute. Instead, SEC made an unfounded determination with no warning or process back to Judge Netburn's courtroom. Ripple requested the internal documentation to explain how and why the SEC arrived at their pronouncements, as well as silence on these various coins. The SEC responded that nothing that was ever said by Clayton and Hinman or any SEC official about Bitcoin or Ether was that it was an official determination on whether they were securities. It appears that Netburn is not buying the SEC's argument that their many statements were not material. In March 22 hearing, she told the SEC her understanding of XRP, not only does it have a currency value, but it has a utility, and that utility distinguishes it from Bitcoin and Ether. This rejects the SEC's story that XRP has never had utility. So there you go, folks. That judge smells a rat, just like we all have all along. iTrustCapital, I wanted to show you this. We're moving numerous clients on a daily basis from other crypto IRA providers. If you are stuck with any of those old zombie companies, you have an option to not only save money, but improve your customer experience. What they're talking about here is what they call an in-kind transfer. And iTrustCapital can do, in some cases, they can do an in-kind transfer where you don't have to sell out of your crypto and you can transfer it straight into an iTrustCapital IRA. In the description of all my videos, because they're a sponsor and I'm a customer of theirs, you can get a month, I think it's 1 or 2 months off, the fees waived if you do a transfer like this, I guess. But I've got all kinds of information about iTrustCapital, including an interview with their COO in the description of this video. I've got 2 iTrustCapital. I've got a Roth and a SEP IRA with them, and I highly recommend it. I also own a lot of XRP in there. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that everybody smells a rat in this SEC case. Thanks for listening.